So today we're going to start with the topic of private lending. And private lending in real estate plays a crucial role because it allows flexible capital to come into the real estate industry where investors can use that for either fix and flips or for rental properties, right? So in this case, private lending plays a crucial role because it gives investors more flexible capital versus traditional investors or lenders such as those from Fannie Mae, Freddie Mac, or even those in Wall Street. But private lending has changed drastically in the past couple of years. All these flexible capital that used to come from private lenders and families as well has drastically changed. So we're going to address three of the most common questions that people are asking about private lending. The first question is, what caused the shift in private lending? And this shift happened after COVID-19. And the reason is because all of a sudden, a lot of lenders stopped lending. We did a survey, and out of 100 different private lenders in the industry, only about 3 or 4 remain lending after COVID-19. And the reason is very clear. Private lending has not been private lending as it was in the past couple of years. What I mean is private lending is not private anymore. Most of the capital coming from private lenders or so-called private lenders is coming really from Wall Street, institutional investors, and private equity groups. So it is the same source of capital that has dried up because of the speculation and fear from Wall Street investors. So the things that changed in private lending is precisely that. The capital dried up because of COVID-19, and we've seen that impact in the private lending sector. The next question is, what is private lending like today versus pre-COVID-19? And well, that is pretty evident. I mean, in the past, we used to see that a lot of these private lenders used to lend with higher loan to values, no minimum FICO requirements, for example. Sometimes they would even offer even 30-year mortgages, and so did we. But then all of a sudden, these programs such as new construction and long-term financing for rental properties completely left the industry. From our business, we had 2 programs that we used to sell to Wall Street and these large institutional investors, and that was primarily new construction and our 30-year mortgages. And the large hedge funds or institutional secondary market investors completely left the industry, and the whole program for 30-year investor lending type of programs left the industry altogether. We've seen that impact also for what's called non-QM mortgages in the secondary market, which were the subprime lenders from the past. So the drastic impact is that the long-term financing and also new construction pretty much dried up because the institutional investors left. The last question is, have the borrower qualifications for private lending changed? And yes, they have. I mean, back in the day, there were no FICO requirements, like I said earlier, but now there are stricter requirements. Most lenders that I know are doing at least a minimum of 650 FICO requirements, higher skin in the game, meaning you need to come in with a little more pocket in your investment for the purchase, or have more skin in the game in the property that you own. Also, more experience. This is not the time for newbies to come into the game because we want to see and make sure that you have experience investing either on flips or on a rental portfolio. Well, these are the 3 questions for today. I hope you enjoyed this information, and we'll see you next week.